what's up, guys? It's Navarro, Head Trader Penny Stocks Club 13. It's Monday, December 7th, 2020. And in this video, we're going to talk about how to set up a trade plan for a swing trade, guys. So I'm going to use an example on one that we traded. We traded some other swing trades, but I think this one is going to be easier to explain to all the beginners out there. So, and that's the goal here for everybody to start becoming a little more knowledgeable on how to enter and exit trades, how to plan for trades. And one of the things that I do want to mention is that a plan consists of your entry, your profit targets, and your stop losses. So that's something that you need to keep in mind. And when we talk about stop losses, it can be different for everyone. The way we do it at PSC13.com is for those beginners who do not understand yet the support and resistance levels. Then what we do is we just go with a very basic 3 to 5% rule, where if, depending on your entry, you're down 3 to 5%, then you go ahead and cut your losses. It might not, it's probably one of the most efficient ways if you're a beginner to have to make a plan, to construct a plan. There is absolutely no limit on or there should be a limit as far as where your stop loss should be. It shouldn't be just 3 to 5%. If you know support levels, maybe a support level can be below your 10% below your entry, 15% below your entry. Now, if you do have a lot of risk tolerance, then that's fine. You can go ahead and set a stop loss way down there by 10-15%. If you can risk that much, that is fine. But if you're a beginner, you're trying to build an account, and you don't know support and resistance levels, then that's why the 3 to 5% rule will help you out in such a manner. Because if you get stopped out, you can just very easily wait it out. And if it gives you another entry opportunity, then you go ahead and take it. You can always come back into a trade. So having said that, guys, a successful plan is when the plan is executed perfectly. It could be either your entry was executed perfectly, your profit target, you took profits when you wanted to, or you stopped out at your desired level. That is a successful plan. That is a successful trade. Whether you win or lose, it really doesn't matter. But if your plan was executed the way you planned it out, if you were up and took profits, then you succeeded in your plan. It was a successful plan. If it failed, your trade idea did not pan out, and you stopped out at your desired stop loss, then you executed the plan perfectly and it was a successful trade. So that's the way I go about trading. If you have a plan and you execute it the way you plan it out, then that's a successful trade right there. And that's how you start building upon your trades, your trade ideas, your plans. You just got to execute them and stick to your plan. You got to stick to your plan. Okay, so let's get right to TRXC. This is one of those patterns where it's difficult to kind of see because it used to trade way high, and right now it is oversold. It's trading below $1. So this is basically a what we would call almost a true penny stock, right? Or a penny stock. It's trading cents on the dollar. So let's zoom in and let's see the pattern that I saw. So what I saw here was this big green day. It had a little bit of relative increase in volume. Then it just started trading sideways, consolidating, basically creating a flag, right? So this is great. And you could have easily just entered anywhere, made some money here if you would get lucky. And, you entered the trade, you made some money, great. But did you have a plan? Was your entry planned? Was your exit planned? Was your profit taking exits planned? If that wasn't the case, then here's how I saw this, guys. And I'm gonna go ahead and use different time frames to explain to you how I plan my entries and my exits. So everything that I swing trade or day trade, I base my entries off the daily chart, which is this chart with the 1 year 1 day, which every candle is 1 day. Here is where you plan your trade and you execute your trade on a smaller time frame, like the 1 day 1 minute, the 1 day 3 minute, the 1 day 5 minute, and so on and so forth. In my case, I prefer the 1 day 3 minute. That's my preferred time frame. Does not have to be yours. That's just what I like. It's a little less noisy than the 1 minute, but that's personal preference. So in this case, we saw this big green candle move up, then it started consolidating, right? So one of the things that we're going to notice here is these two red candles in the pattern, they're kind of forming a little top, right? So let's go ahead and see here. I'll draw a line there. And what I'm going to do is I'm going to go to the 10 day 30 minute. And you can see how that top right there, that white line, that's the resistance level, right, from the pattern. So I plan my entry based on that level at the 49-cent level. But let me go ahead and zoom in a little more. So my entry was planned from this candle and from this candle, the 49-cent candle, the 49-cent level, excuse me. So that's where my entry was planned, and we entered the trade yesterday for a swing trade. Now my profit target was 60 cents. How did I get to a 60-cent profit target? Let's go to the 1 day 1 year, and let's go ahead and zoom in here. So I went all the way back to this pattern here. You can see where it found support. You can see where it got rejected, right? Now these patterns here, there were going to be a little bit of resistance, but nothing significant once it broke the 50-cent level. So what I'm going to do, I'm going to get the price line tool here. I'm going to go ahead and set that price line right there. And then we're going to see where right here, we got that 49-cent level. So we basically know that the 50 cent, the $half is always going to be psychological resistance. So we had the profit target at 60 based out of the daily chart, the 1 year 1 day, where it had found some support and some resistance, which would basically today, that's what it would be, right? So now let's go ahead and go back to the 1 day 3 minute. So our entry was yesterday, right when it came to test that 49-cent level. It came out, held support. We entered here around 49.15, around the 49-cent area, and look at where it bounced later on during that day. It found support again there, guys. So this was a little bit of a confirmation that it was just going to continue going up. And today it held the 50-cent level. It didn't even come and touch it. It just stayed up here, and then it kept on going all day. I took my initial take profit was a 57 cents. I took some off here. Then I went to eat lunch. I put the the rest of my shares here at 60 cents. While I was eating lunch, during lunch, I got triggered out. I got filled. I got executed right here for my final take profits of 60 cents, which was my plan exactly, my profit target exactly. And this was a free trade off of the www.pse13.com weekly watch list, which is completely free. You guys go ahead and check it out. So that's from a 49-cent entry, guys. Let's just do the math here really quick with this. So our entries from this white line to our profit target, the other white line, you can see that it was over 20% return. So in the market, guys, if you get 5% is great, 10% is great, 15, 20, 30, I mean, now you're talking big gains. You are talking big gains. That's the way you got to see it. Now, eventually, sometimes you're going to get lucky and get 40, 50%, 60%, 70%, and that's great. But you have to take the most higher percentage moves are anywhere between 5 to 15%. that's typically where most of your stocks are going to be around. So those are the profits that you need to start taking, or at least taking some of the money out, some of your profits out. Maybe leave some writing if you want to test the market a little more. But you have to lock in profits. You have to lock in profits. And that's why I locked in profits at 57 cents. Okay, it did start forming that flat top, so I liked it. I left the rest there, and then I just got triggered out during lunch because I wasn't even around my computer. I just set my my final shares there to sell, and I got triggered out, and that was great. And I made some more money while eating lunch. That's awesome. So that's the great part about planning your trade and then trading the plan. And now after I took off profits here at 57 cents and I was eating lunch, now I felt more comfortable because I knew I had already taken profits, and this was going to be a successful trade regardless of whether it went all the way up to 60, in this case 61.50, or not, because I had already taken I believe 3/4 of my profit, 75% of my shares. I sold them at 57 cents. That's where I sold them. And then I only had 25% of my remaining shares, 25% of my position left running. And that's where I got that bit extra of profits to the 60-cent level. So hopefully this is something that you all can take and help yourself plan your entries, your profit targets, and your stop losses. So in this case, the stop loss, guys, that's something that I know I haven't talked about, but before I finish this video, let's go ahead and do that. So now there's different ways that you could have planned your stop loss. Let me go here to the 10-day 30-minute. So one of the things you could have done is you could have seen here, okay, that 46-cent level looks like it looks like it's an important level. There's some straddling there, and there's some bounces here. There's some support here and here. So let's go ahead and draw a line there. To me, this would have been my exit from a 49-cent level. So this was our entry, right? So if I click here and I go down, let me change the tool. Let's see how much I would be risking. I would be risking about 6.5%. Now, is this a good return ratio? Are you risking a small amount to make a big amount? Yes, you're risking 6% to make 20%. So the risk to reward ratio is definitely, beyond what you would be expecting. Usually traders like that 1 to 3 return or 2 to 4 return. In this case, I believe it was way more than that. It was 1 to 4 return. So that's around somewhere around ballpark around there, guys. So you are risking 6%, 6.5% to make 20%. So that is definitely a good risk to reward ratio on this trade. And that's something that if you don't know where to stop out, you're going to probably be holding this if it were a broken 46, hoping that it's going to come back up. And once it breaks down, guys, shorts are going to be all over this. It's going to just really just crash. And you're going to be stuck holding the bag. You're going to lose more. You might even be adding over here, increasing your risk instead of reducing it. So please just make sure that you stick to your plan, follow it, and if you're losing, just cut your losses and move on to the next one. So hopefully this is something, again, guys, that can get you through some of your trade ideas, something that can help you plan your trade ideas and make you a little bit more successful in your future journeys. That is it for me, guys. We'll catch you in the next one.